Hello, YouTube. Today, the stock market is off to a pretty excellent start. We got down pumped up, and we have a last stand from the bears as we approach the 430 area. I am looking at specifically 429.66, which goes back to the high that we staged here on May 4th. We got two tops here, one on April 24th and also one on May 4th. So the reason why this is important is because as we look to where we're likely going to go from here, or on the weekly chart, we note that we've got the red team or the bears who are coming off the all-time high, and we have a connect here where we now meet the blue line. The blue line is going to be the short-term price or the 50-yard line if we were playing football. And then over here on the downside, we got the bulls who are advancing the chart all the way up to the 50-yard line too. And now the big question is, are we going to break above and go higher? Are we going to reject and go lower? Or are we going to just start going sideways? That's all stocks can do. They can go up, they can go down, or they can go flat. An easier way to look at this as we smooth the data out is by zooming out to the monthly chart. And we can note that we've already gone through the lows for the late part of 2021. And now the big question is, are we actually going to make it through our relative high, which is right here at 429.66. That is where we get that number from. If we can break over here, I think that the 50 weekly moving average, currently at 433.16, would be the next target, along with the 200 daily moving average, which is currently here at 431.71. So the really important question here is, what is driving the market, and is there strength left here? Well, when I look here at the daily chart, what it shows me is that the low and the open are within 6 cents. Open at 424.77, pushed down by 6 cents, advanced right from the open. So that's a gap down pump up. After the Friday close, that's pretty bullish. And the reason why this is important is just because we're climbing the wall of worry. Volume is low, but price action is strong. If we look over here to the fear and greed, it was really close to getting into greed. Let's see if it did. Nope, it's right at the last point for neutral, which means that we're about to enter the part of the market where it's going to be easier for us to go up than it is to go down. And as I noted here on the daily chart, what's even more impressive than just what happened purely on the chart is that we put in a 1% move off the low today. And a lot of options got paid up. So almost every call got paid, noting that we closed here at 428.8. We can note here that what got paid? Well, from 425 all the way up to 428. That's a whole bunch of options. There are about 500,000 that got burned above 429, and a whole bunch of puts got burned too. All these ones here below 426. As we look forward to Wednesday, and this is so important because on Friday we got monthly OPEX, which is options expiry. And as we get a preview here for Wednesday, which again, this will also be a really important date when we have the Fed meeting minutes coming out in the afternoon. And we know there's a whole bunch of activity from 428 all the way down here to 422, and also from 426 up here to about 430. So that 430 number seems like it is building up a lot of pressure. And if we get a positive reaction to more data this week, I think there's a strong chance we could actually be over it. And come on, options chain, load up, baby. Here we go. This is the reason why. So if we understand what options are, they are motivation from the bulls to go one way or the other. Where's all the volume today? Oh, geez, right? It's right here at 430. So there's 140,000 options that were purchased, and there's already open interest of 50,000. This is notable because there's also volume up here, volume and open interest up to 435. Which means that the bulls think we could advance all the way to 435, if not higher, into the later part of the week. And if you remember the reason why that 435 number is so important, it's because it is where we birth a new bull market by being 20% off the lows. We're going to be exiting correction territory by being over 432. We're going to be over the 200 daily. We're also going to be over the 50 weekly, which means over 435, means we've cleared all of the resistance. And I would call that a new bull market if we can close the weekly candle there, which means all we really have to do is go up by about, from today's high of the day, roughly another 5.5 points. It's not really asking all that much. We put in 5 points off the low of the day today. So what we want to ask ourselves is, what should we be doing here? The saying is sell in May and go away and come back on Labor Day, where Labor Day is almost 2 weeks away. So if we think about this monthly candle here and where it could go, that's really what we want to ask ourselves. After we clear this roughly 435 area, We could go up to 450 on the monthly chart, right? Maybe some resistance here at about 440, natural number, 10 points higher, but I'm seeing every reason why we can go higher. So I'm going to walk through two examples here. And first example is going to be the weekly chart, or if you are someone who likes to hold on for a little bit longer, you might be called an investor. So an investor would be looking for us to close above the 50 average. And then what I am looking for is a back test to confirm this level is support. And then for the curl, for me, that would get me mega big bullish. That would get me to go from roughly 50% invested to about 100%. Another way of thinking of that is looking over here on the daily chart, or if you're someone who looks for shorter term patterns, daily chart is great. So we have every reason that there's pressure building up here. And again, what is that pressure? We have the pressure building up here and then we shoot down. If we now look on the bull side, we have pressure building up and it's releasing. It's not released up. So it would release by actually getting above the 200-day moving average, or roughly 432. And we also have a gap on the chart here. So we left two gaps over here, and we could easily do the same thing on the right-hand side. And because this happened with a lot of volume, we could trust the move more. That is what's missing here. But if price is king and volume confirms, what happened since we got our gap up the last time? We tested the Thursday top and bounced, and since then it's been pretty much a straight line up. Really strong close on Friday, really strong continuation on Monday, which means it looks like the bears are really struggling here, which is why they have to make a stand. And if they don't do it by Wednesday close for those next option chains that expire, the bulls might start to get us over into a greed or into a bull market. So that's really what we want to ask ourselves is, are we able to actually get above the 200 daily, back test and then advance? Because we have a clear template here. If we hide all the lines for a second, we're looking at this area right here where we push over the 50-day moving average, then we back test, and then it's just a slingshot up. So that is what I would love to see at that 200 DMA. However, what I would note now is that there's more than one type of person who's going to be selling. There's also more than one type of person who's going to be buying. So the bulls who bought down into this nice little pocket over here, they could be looking to take some profit as we get closer to that 430 to 435 area. I'm really not sure what the reaction is going to be here. So there's people who are bullish who are looking to sell. There's people who are looking to hedge or not sell but be protected with insurance. And then there's people who are covering their shorts. On the flip side, there are people who are looking to buy, initiate fresh because we're almost into a greed market. There's people who like buying the breakout, or again, they would like to buy above 430 or above 435. And then finally, there's also people who are, I think I got through those, so I might have lost my train of thought there. Anyways, so what's really important for us is that if we're looking at the daily or the weekly candle, we just want to know what level matters for us. And for me, the resistance zone starts at about 429.5 and goes up to about 435. So until we claim those, I am not ready to say we're going to be getting a push higher or a push lower, but I am very ready, willing, and able to adapt to the data as it comes in. And let me actually get my screenshot up here so we can actually remind ourselves what those dates are. So we have a really big, I'm actually going to go through both of my notes from the weekend because I think this is a good time for us to check in. So if we now ask ourselves, okay, Fed meeting minutes on Wednesday at 2 p.m. Well, if the bears are going to make a stand, I would not want to see us back above 432, really 435 by Wednesday. And then they have to come in with a big stomp. They got to get the chart down. So if they're not able to do that, I think the bulls are probably going to clinch it here. We got monthly optics on Friday, which whoever team wins on Wednesday, I believe, is going to get follow through into Friday. And if that coil is springing up for the bulls, it could easily release and give us that extra push. Again, if we look at the bull and bear case here, this is starting to look a lot more compelling for a bull. And team risk reward right now is that, hey, we don't know if we reject off the 200 daily, 50 weekly. That's probably a short-term top. We go down and find where our next relative low is going to be, and then we reset. But with the 4-week winning streak and now a fifth to start, this is the best we've done since November. So if we're building up that pressure and it's going to release, we want to check in with DXY and TNX to see whether or not they are still flashing warnings. Because the other surprise there, again, with that other country in the Middle East, in Asia, didn't really have a bearish reaction that I would have thought it would have had. So there doesn't really seem like there is anything that is able to take this market down. And if we get a whiff of good news, oh boy, that could be a really big signal. What would that mean? It would mean officially seeing in the FOMC meeting minutes that maybe that's good enough. Maybe we actually did get peak hawkishness in hindsight. So looking at the dollar, it is right around a key area again, 106.56. We got to a high of the day of 106.55, resting roughly there right now. DXY is up by 0.8. We also have the S&P up by 0.4. And this just shows that there is TINA. There is no alternative. Really soft numbers out of Asia for economic data, including GDP, just shows that maybe things aren't as rosy over in China as they were before. So it kind of looks like US is a lot more compelling here. And then if we have a look here at the 10-year Treasury note, which is now just below 3%, 2.8%. This is telling us that I'm not quite sure exactly what's going to happen. We have a rejection at roughly 3.5, which was our high. And as of right now, as I mentioned, we're either forming a cup and handle. So there is a cup with a handle being formed, or that's it. That's the top. And we're not going to get back above this area here. So we have to leg down, and we have to probably start making fresh lows below 2.5. So those FOMC meeting minutes are going to be very critical for this next week. And as always, if you've enjoyed the video, I would really appreciate if you could smash a thumbs up and drop me a comment. Otherwise, the video from the weekend will queue up here in a moment, which provides my deeper thoughts in terms of how I got ready for the week, where I think we're going to go. And thank you so much for watching. Look forward to seeing you tomorrow.